let me start by introducing myself. My name is Shyam Sunder. I am the Managing Director of PeakAlpha Investments, a financial advisory firm that was founded in 2005 in Bangalore. And we are a team of about 30 people, and we work with 4,000 customers, of whom nearly 800 or so are fee-paying financial planning customers with whom we enjoy fairly long-term relationships where we meet with them every quarter to discuss their portfolios and give them the necessary advice. So we're very happy that you've taken time today to join us. And I hope that at the end of this, you will find the session to be quite valuable. This is a picture that I picked up from Google just a short while ago. And I have to say, you know, in our generation, there's probably nobody in my generation and below who has encountered any event of this scale and magnitude, which has at one time affected the whole world and pretty much brought big parts of the world to its knees. And as a result, presidents and prime ministers and rulers of many countries are actively engaged in talking to their population and guiding them and advising them as to what to do to make sure that their life is first protected and second, unaffected as much as possible. This is something of a scale and magnitude that many of us have not experienced before. The previous generation can refer to world wars and other events like that as something of a comparable magnitude, but definitely for us, this is the first time we have seen something as global and as big a deal as this is now. As you look at this picture, though, there's a few things that kind of struck me, which is that India, in a sense, is rather fortunately placed in that it is fairly close to the equator. So the equator kind of runs about here, and India is fairly close to the equator. And the good thing about this picture is that everything that is close to the equator is light blue, which is a few number of cases per million people. And the darker the blue gets, it's more people affected. So as you move from the equatorial to the tropical to the temperate regions, the virus seems to survive and thrive better in those areas. So it's a pretty difficult thing for all of us to go through. And we definitely in this call today are not going to be talking about the virus and how to deal with it. There are many experts out there, and in any case, you must be getting your fill of WhatsApp messages as to what is the best way to handle this situation. So we're not going to go there. We will restrict our discussion to the financial implications of this. Financial markets always hate uncertainty. Everything that is known is usually fully priced in to the equities and the underlying indices. It's only new information or lack of new information that causes the markets to move. So as we were placed in the middle of March, and as stories started to come out about China and how China was dealing with the virus, and as it became clear that this is not a China-specific problem, but this is a problem that is likely to be much wider in scope, as in it's going to affect many other parts of the world, that is really when the market started to react. I think many of you may remember that at that point, India was still in a situation where the number of cases were less than 100 and the number of lives lost was less than 10. And yet, that is when the market started to correct, and they corrected very sharply. And that is because financial markets always hate uncertainty, and they always try and forecast what is likely to come down the road and then take action today. What was the uncertainty? The uncertainty was we didn't know at that point there was no vaccine, and then we didn't know when a vaccine was likely to be found. Second, how much longer before the cases would peak? And then, we were able to successfully put this whole episode behind us. And lastly, once this episode from a health perspective was behind us, how long would it take for us to restore to life as usual and business as usual? These were all great unknowns, and because markets hate the unknown, markets hate uncertainty, the markets corrected very sharply. I'm talking about all of this in this, rather in the past tense, but that's probably not fully appropriate because even today, many of the answers to these are not yet known. But if you've noticed what has happened with the markets corrected in India from 42,000 to 28,000 Sensex, which was about a third. In the US, the Dow went from 30,000 to 20,000, which was also about a third. So it corrected very sharply and in a remarkably short period of time. And as soon as we kind of have hit this level of 28,000 to 30,000, the markets seem to be hovering around these levels for a while. It's too early to say that we have bottomed out, but it definitely is a trend where we corrected and then it's kind of hovering, and there is volatility, but it's volatility around these levels. What are some positive indications for us? One is that there are several countries that have already beaten the virus and kind of moved on. China has reopened its manufacturing capabilities. South Korea is already talking about what are the measures that it took to be able to combat the virus effectively. To a smaller measure, we are looking at Singapore and other smaller countries who have effectively been able to, either put the virus behind them or at least being able to bring it under control. Second, there are some emerging green shoots in terms of treatments that are showing promise. They, of course, still need to play through, but the anti-malarial drugs seem to be of some potential. And like I said earlier, India seems to be somewhat better placed, fortunately, because we naturally have warm weather, plus we are heading into summer. And it appears that the virus doesn't deal with the heat very well. Second, India's own natural immunity tends to be a little bit higher because of past illnesses. I was talking to a doctor the other day, and he was saying that if you've already had dengue or already had malaria or things like that, you naturally have some immunity in your body against this virus. And third, our own government's response has been quite big and strong, as in it's been a 3-week lockdown, and we haven't seen that kind of a complete lockdown where 1.3 billion people have been kind of ground to a halt in terms of their day-to-day lives as we have. So hopefully some of these things will help us in being able to peak faster, and the peak itself is not as sharp, and subsequent to that being able to resume normalcy as soon as we can. And having said all that, we still don't know. So I have to put that out on the table. We don't know how quickly we will see the back of this. But it's sometimes useful in situations like this to view the historical context. Here I have 4 different episodes in the past. Let me start out by saying that none of these is even order of magnitude as serious as what we are going through right now. But still, there are some lessons that we can learn from here. So we had the SARS outbreak, which was Jan 2003 to March 2003, the bird flu outbreak, Jan 2004 to August 2004, Ebola 2013-14, and Zika outbreak 2015-16. So as I look at these pictures, there are a few things that I pick up in terms of some useful points here. The first thing, of course, is that these are episodic in nature. So they come along, they make a major disruption to the way people lead their lives, they shake up everything, but they pass. And once they pass, life kind of resumes normalcy. People go about their lives the way they used to before this thing had happened, and businesses run their businesses the way they used to before this has happened. So whenever you look at, these kind of outbreaks, they tend to have a sharp spike in terms of their disruptive nature, but then they fade after that, and then life kind of resumes normalcy. The second thing that I noticed as I look at this is that the fall from the peak to the bottom and the recovery tends to be rather comparable, in terms of how long it took. If you look at this and the recovery, they're rather like mirror images of each other. So the amount of time it took and the speed at which it fell is comparable to the amount of time it took and the speed at which the recovery happened. The same here, the same here, the same here as well. So they caution you in financial markets to say past performance is never a good indicator of the future, but sometimes there are useful lessons to learn here, which is that we can reasonably expect that the fall was very sharp, but by the same token, as things recover back to normalcy, the recovery may also be very sharp in terms of how quickly at least the financial markets will recover. Because like I said before, financial markets don't wait for the last person to come out of hospital before it starts to go up, just as it didn't wait for the death toll to hit 1,000 before it started falling, right? The third is, like I said, markets always anticipate. Now the question is, where on any of these lines would we consider ourselves? Are we here? Are we here? Are we right at the bottom? That is, of course, something that is unknown now. But if you remember what I said earlier, markets hate uncertainty. So if we are in a phase now where uncertainty is fading gradually, then I think we can expect that we are starting to approach the bottom a little bit. Because two things. One, there are some initial signs that we may be able to deal with this virus effectively. And second, in all financial markets, there are people who are waiting to make money, and they would look to make money by getting in before the market rises. And the balance in terms of the market's price is always found where the demand and supply kind of balance out each other. The number of people who think the markets are going to go fall further will be selling to the number of the people who would be looking to buy because they think the markets are going to rise soon, right? So as soon as that balance is found, that's probably when we look to say we'd be hitting the bottom. It's hard to know exactly where we are right now, but I think we would have reached the bottom as soon as some early indications of either some sense of plateauing of the cases, which interestingly in New York we are already seeing. The US seems to be rapidly approaching a place where the number of new case growth is falling, and hopefully that our peak and the fall after that will also happen fairly soon. But that would be an indicator as to where we may see bottoming out. So I talked about episodes like this. It'll be useful to now see what some black swan events with some other contexts have been. So I know this is a slightly busy slide, but I just want to draw your attention to the fact that, all the way from 1973 through to now, there have been several episodes where markets have gone through a bit of a bear phase and then they have recovered. So Black Monday 1987, the markets fell by about 30% and then they recovered in 398 days. The global financial crisis, the markets corrected by about 60%, but then the recovery took 1,022 days. So roughly about 3 years. COVID-19, the correction has been about 30%. We don't know how long it will still take to recover. But one other useful indicator in this is the type of disruption. So many of us remember the global financial crisis. When the global financial crisis happened, business as usual changed rather significantly. Central banks behaved differently. They went into quantitative easing, wherein they pumped in a lot of money into the system to help companies and businesses and people deal with that. Regulation changed. A lot of new regulations were put in place to make sure that something like the global financial crisis has a lesser chance of happening again. So structurally, there were several changes that were made. In the case of these virus episodes, very rarely have we seen structural things change. Life, like I said, tends to go back to normal fairly soon. SARS, for instance, was a correction of 14%. It went back to normal in 40 days. So if you look at this here, this is a report by Goldman Sachs, where they have talked about 3 different types of events that lead to bear markets. One is a structural bear market, the second is a cyclical bear market, and the third is an event-driven bear market. Now, the kind of episodic nature of health-related disruptions tend to be event-driven, which is that if you look at this, the decline is less sharp, the average time taken is less, the average time taken is less, and the duration of it also is less. So compared to 1,022 days of the global financial crisis, all expectations are that because of its episodic nature, we would expect that the virus-related problems will take less time for us to see through. Now, one other thing to keep in mind is this question about whether all countries across the world are going to experience this in pretty much the same way. Or is India likely to have a slightly different experience from some other countries? And every indication is that the Indian experience may be different. I'm just going to show you one reason at least as to why India may be a beneficiary of what is happening to some extent compared to some other countries. For example, Saudi Arabia, for example, Russia, for example, the US, for example, Venezuela, which are net exporters of crude. So if you look at this here, oil price has corrected very sharply. It went into the low 20s before bouncing back a little bit, but it's still in the 30s now. What does that mean for us? That means for us as a country, because we are the fourth largest importer of crude oil, and the fact that almost all of our crude oil is imported, this is actually a bit of a silver lining in a dark cloud for us. There are some statistics that show that we save about $14 million for every $1 drop in the crude oil prices. So this is a significant benefit to us. The government of India will have to spend a lot less money in terms of importing crude oil. There's another factor, which is the extent to which the world had been hitched to the China bandwagon in terms of manufacturing capacity. If you were Apple and you were making cell phones, then one big issue that you have is that when the Chinese factories shut down because of an event like this, your supply chain gets disrupted very badly. I heard about this car manufacturing company in Germany, which had to stop its assembly lines because one of the ingredients that was required to be added to its paint was actually made in Wuhan. And because Wuhan was completely locked down, they couldn't get this ingredient, and therefore they had to stop the assembly line because the cars that then rolled out wouldn't have the necessary gloss on them. So China has become a very, very important part of the assembly lines of many companies around the world. And now many of those companies are sitting up and wondering, how can I de-risk myself against something like this happening again? And India is one of the logical alternatives because we are a large country with a big educated mass of people. And for us to be able to put together the manufacturing capabilities would be something that would be of benefit to us. How effectively we are able to grab that opportunity still remains to be seen, but at least that opportunity presents itself. So this is a little bit about, us trying to understand the pandemic and what it means in terms of financial markets. Thank you so much for taking the time. For those of you for whom PeakAlpha is new, we'd love to, engage with you and see if there's a good fit between PeakAlpha and what we do and what you might be looking for. And if we meet your requirements, then we'd love to welcome you to the PeakAlpha family as well. But apart from that, stay home, stay safe, and looking forward to meeting many of you over the next few days.